Well, we're in the 83rd month of an economic expansion, which began in July of 2009. Unlike a lot of previous expansions, which have been, really robust and kind of jump out of recession, this one has been really, really modest in terms of the annual economic growth. It hasn't been until the last 2 years and possibly 2016 that we've actually seen some pretty strong economic growth. In North Carolina in 2014, we had 2.9% growth in output. 2015, 2.9% growth, and in 2016, we're expecting about a 3% rate of growth. So these 3 years will be the kind of growth that you're looking for in an economic expansion. Prior to that, we've kind of had sputtering economic growth. We'd have a halfway decent year or a halfway decent 6 or 9 months, and then it would be not negative, but pretty close to flat for a couple of quarters, and then it would bump up again. And so there's been that sputtering aspect of economic growth prior to the last 3 years. We looked at other states, and we kind of looked at 4 different things. We looked at the absolute growth in GDP since the fourth quarter of 2007, which is before the recession actually began. So we looked at the absolute growth of output, and we looked at the percentage growth of output. And North Carolina did really well. We were 6th in the absolute growth of output, 6th strongest state out of 50 states plus the District of Columbia. And we were, on a percentage basis, we were 14th out of the 51 states in DC. So on an output basis, we've done fairly well. Obviously in the top 25% of state performance, maybe the top 10% of state performances. From a job standpoint, we've done okay, but not nearly as well. So in the jobs, I think we were 11th in terms of total jobs created, and 26th in terms of percentage of jobs created during that period of time, which puts us right in the middle of the pack. But when you take all 4 measures together, you have to acknowledge that North Carolina has been in the top 25%, if you will, of states in terms of economic growth during this great recession and this recovery, this long recovery, but rather modest recovery. We've done fairly well, and could we have done better? Possibly. We could have had some policies that would have made a difference, but it's hard to be critical when you're in the top 25%, if you will, of states overall in terms of how the economy's gone over the last 7 or 8 years. 2016 is going to be another year like 2014 and 2015. So this will be that 3rd really solid year in a row of economic growth. We expect 3% growth during that year. We expect a little bit over 100,000 jobs being created in 2016. Swing ahead to 2016. That's where things start to get a little bit weaker. We don't really see us being able to sustain this 3% growth that we've had for the last 3 years. So I think we're going to drop down to the low 2% range. Again, we'll start to add close to 100,000 jobs, but we probably won't quite reach that number in 2017. It's a little weaker than the last 3 years, but still, when you're in the 9th year of an economic recovery, it's not a bad situation to be in, not a bad place to find yourself in. And all bets are off in terms of going forward. Again, we don't really see anything sitting out there in 16 or 17 that says, oh my goodness, we need to be careful this week. This could cause a recession if it goes wrong. There's nothing out there like that right now. That's not to say that something couldn't crop up tomorrow. It's always a wild card, but it's very unlikely that this growth for 2017 will be unrealized.